Good evening, traders. It's Mark here from the Day Trading Room. The time is 10 p.m. London time on Friday the 29th of October. Last day of the week, last day of the month. And when it's the last day of the week and it's the last day of the month, you've got to be careful what you're doing with your trades. I've got a big warning sign on my diary, a big cross a big circle, should I say, around the date. It just says end of the month. Watch out, play it safe, do not end the month on a bad note. Now I know there's some guys out there who say, it's ridiculous, you trade right to the end, right to the bell, in and out, and but I've been doing this for nearly 10 years now, and I know my strengths and weaknesses. And one of the things that I always used to hate was ending the month on a bad note. I hate ending the week on a bad note, but ending the month on a bad note just really spoils the start of the next month, because you just don't feel as if you've been done the best that you could have. So I'm always very careful on a Friday, especially the end of the month. I'm not looking to hit any home runs, just looking to put in a couple of good solid trades and then leave it. So today I've got a couple of ideas at the end of the month. We're either going to get a reprice, we're going to get some window dressing. The market's going to be pushed up, pushed down, find a new level, or it's going to get stuck in a range. It's going to just be happy where it is, and there's going to be no catalyst to drive it elsewhere. Now, two things I look at before the open to give me a clue for that is the overnight range. How wide is the overnight range? If it's less than 100 points on the Dow, then I consider that to be a small range, or less than 75, something like that. And where's the gap? How big's the gap? If there's no gap, or if it's less than 20 points, which I consider to be not really much of a gap, then again, there is potential for it to be a range type day. If the gap is big and people have been accumulating or selling in the pre-market, then you've got potential for a trend day which finds new value at a different level at the end of the month, and you can play that accordingly. So just getting some clues of how the day may behave before the open can just give you a little bit of a helping hand. It doesn't mean that you can't change your premise and the way that you approach based on the market action at the time, but it does give you an idea of a way to perhaps think about how your trades are going to pan out for the day. There's one obviously caveat to that, and that is if we get some sort of reprice based on data. And today we had GDP at 1:30 London times, that's pre-market. And then we had the PMI and the consumer sentiment out at 2:45 and 3:05. So assuming they weren't going to be anything crazy was going to happen from that, then I'm expecting a range day, unless the market tells me otherwise. I'm not going to be stubbornly thinking that this is a range day when it's just flying off and there's loads of volume coming in and we're breaking through levels. But all the guidance, all the things that I've looked at, the overnight range, the gap, the data's not changed the situation. We're in the last 10 days, we're right in the middle of the last 5 to 10 days worth of trading. There's not much going on. So range day, it's the odds are that's what's going to be. So that's what I was looking at the open. But in the range day, you've got to decide whether you're going to take from the mean for a push out, or you're going to take the extremes. Now, the easier trade is to take the extremes. Wait until the extremes are hit, look for some topping pattern or bottoming pattern, and play the move back to the middle of the range for scaling some, and then perhaps looking for the other end of the range, because the market will just cycle backwards and forth through the range. But at the open, I like to look for some sort of opening drive. I like to look for some sort of commitment from larger traders that pushes the market one way or the other to sort of start the definition of the range. Opening drive, I call it. Some people call it initial balance. I think is the textbook terminology for it if you're using market profile. So that's what I got up to this morning. Straight away, I went long, and it was a little bit of a flaky long, really. I waited for this push down that just failed, and there was my long. The stop was just there, and to be honest with you, it was nothing more than the fact that the pre-market had slightly pushed up towards the open. It'd been in a bit of a tight range, but the GDP had come out at 130 and pushed us up. So the open was near the top end of the range, as you can see here, the dotted yellow. So I was just looking for a little dip there, little bit of tape action, just to get a push. And just before the data came out, got 10 ticks out of that exactly. That was it. No scales, nothing fancy on that. Just taking 10 ticks and waiting for the data. Data came out, nothing much happened. It messed around here. We drifted down until the next set of data coming out at 3 o'clock. I think it was 5 to 3, and nothing happened. Again, the round here it was just chopping. It was near the bottom of the range. Range had been very low, but then all of a sudden we had this push, and this was so clear on the tape because it was so quiet, and the market was so quiet down here. The ticks couldn't get below minus 500. There was nothing really going on, but this candle here just stood out as just a candle from nowhere. Bit of a wild ticks, a bit of volume coming in. And the key thing was it was holding. Within this 1 minute candle, you got a 1 minute candle there. 1 minute's a long time in the market when you're scalping, and so to see this holding the high bid, it wasn't dropping. It was really struggling to drop at all. And this around here was the 10-100 cash level. So to be holding there and to not even be dropping down again was a bit of a key level, a key signal. So I took a long there, and this was only half size for me, primarily because it was a bit halfway in between the range, and the risk was reasonably wide risk, to be honest with you. My target was going to be this high here, and ultimately I was looking for this level here. I thought perhaps that would be the range that we'd fall into, but you never know. We started to push up. I got my target here. Then the market just flushed. We got a really high tick reading. The volume was peaking. It was just struggling, and I held on to the last quarter of the trade all through this here, because it just looked like a classical bull flag. But then again, you've got to come back to the initial premise of this is a range day, so I'm not expecting it to suddenly shoot off into the distance. But I would normally expect one more push higher after a good move like that's revalued itself at the highs. But it got one final probe here, failed, and came back, and I actually gave it a little bit more room than I should have done. I should have just ditched it here, but I ended up holding it all around here just for this push up. It's quite a long time for me, this trade, but I thought we might get one more push up. We didn't get it. Came out here, but as mentioned, was back here. That was still a good profit on the whole trade, that one. So that was it really. I didn't do anything else the rest of the day. There were some good opportunities with this double bottom, and perhaps if it wasn't the end of the week, I'd have been on that. It was around that midday level, especially here. You've got this tick divergence, push lower, got good support here, doof doof, push lower, ticks not confirming, volume drying off. You're going to expect a drift back to the mean of that move. So anyway, let's go through Wednesday and Thursday's trades. Didn't do a video. Now Wednesday and Thursday, interesting days. Difficult day on Wednesday. Still ended up in the green, but the opening drive was so much faking going on the tape. It was crafty. We were just sitting here. Data came out here on the Wednesday. It was I think it was new home sales or pending home sales. Popped us again. We just was stuck in this range, and it just kept, the amount of times it would test a level, and then it finally broke through, and giving some targets there, but very difficult to read that one on the tape. And actually, that seems to be the pattern at the moment, which is a bit unusual. The market runs in cycles, and I'm not talking really about price cycles here. Not only does it run in cycles during the day, up and down, and how the price moves, and also from year to year. I'm not really talking about the price of the market. I'm talking about the way the market moves, the way that that cycles, last year we would have situation where it would consolidate and then push on. And you could wait for the break, you could wait for the pullback, and then you could join the move, and there'd still be plenty of meat left in the trade. You still get another one or two drives usually, and then that dried up, and then we went into another phase of literally just fading levels and waiting for the fake through, and then getting on the other side, on the other side of it a good resistance or support level, and riding that back into the day's range. So that was working for a while, and now I almost think we're in a transitional period from. It's really the sort of the range we're in, but the market seems to be trying to probe through. It will fake through a couple of times and pull back. So anyone who's taking the break is just getting chopped. If you're late on your trade entry, you're getting chopped, or you're gonna have to take a lot of heat. And here's an example on Thursday. It pushed lower here. Anyone taking that break, okay, you got away with it. Anyone taking this break here, looking for that range fill, which is something I like to do, but I'm quick. If I'm taking the break, if that doesn't confirm quickly for me, then I'm straight out. I'm taking a 5 or 6 tick loss, because they can be deadly breakout trades. If you get them wrong, you're on the end of a fake out. And so you either predict it earlier, so you've seen this down move here, wait for that little pullback to that support level, take it there, give yourself a little bit of room to breathe, or leave it, because at the moment this market, should I say, is doing a lot of this sort of thing, just probing, looking for the world like it's going to go, and then it will eventually go, and give you. And because the targets are so low anyway, really, if anyone's trading that, they're probably getting hammered. But Thursday, yeah, as I say, Wednesday, we got that push. I finally got that push to our target. This was a nice little counter trend move. Didn't get on the end of that one at all. Remember, I traded this VWAP, selling on the VWAP. Hardly anything in that at all. Not really worth it. Thursday was more opportunity, because we really just started this second wave of selling, which just, I think, caught a lot of people out. They weren't expecting it, and the tape really started to pick up there, so you could get on the end of that, and there was a good move to be had from that one. I'm running out of time a bit here, so let me bring in the 5-minute. I hope we can see that. This is what I've got at the moment. This is actually a Dow Cash, an S&P down there. Dow Cash, and the way I've got this at the moment is really 11,100 is the pivot point. It's not a pivot in the traditional sense, but we have not really probed much away from that either way within the past 2 weeks. We spent some time up here. We've spent more time in between 11,100 and 11,200 than we have 11,000, 11,100. So really, I guess theoretically the pivot should be around here, but I'm just basing it around these whole numbers. It quite likes this 11,100. You can see these other levels that I've got. I've got this is the cash as well, 11,170, 11,150, 11,114, 11,060. You can see, it's playing quite well to these levels. And Thursday, when we got that push lower, that nice test of these levels, and even on Wednesday tested that level, which was from several days ago, as you can see, still coming to play now. So it's worth looking back at your 10-day chart, 15-day chart, or even your 60-minute. Just having a look back, see where the levels are, and then just playing these levels, because at the moment it's not managing to break free. One day it will, so you've got to manage your risk. It's very important to keep that risk managed, but at the moment these levels are working well. It's moving quite cleanly from one level to the other, so if you're good at holding your trades, you're going to be rewarded well. Have a good weekend, guys. We're back with another video shortly, and we'll see you soon.